Opendoor just closed out Monday's trading session with a powerful surge, finishing the day up nearly 19% at $3.78 per share. This kind of move is exactly what gets retail investors buzzing, but the details inside the session tell us a lot more than just a headline number. So let's break it down and set the stage for Tuesday's pre-market, because there's a lot going on, not only with the stock itself but also with broader market developments that could ripple into sentiment. The day started with fireworks as Opendoor rallied hard right out of the gate, reaching as high as $3.95. That was a big psychological moment because it put the stock right under that $4 level, which often acts like a magnet in the market. But after that initial rush, we saw a pullback. The stock retraced down into the $3.40 to $3.50 range, and here's where things got interesting. Instead of collapsing or giving up the gains, Opendoor built what looked like a base of support around that $3.50 mark. It traded sideways in that zone for much of the session, absorbing selling pressure and shaking out the more impatient traders. And then, in the final 90 minutes, the stock caught a steady bid and pushed higher into the close, settling at $3.78. That's constructive price action. The early rally shows there's enthusiasm and momentum, but the consolidation and base building suggests that buyers are stepping in on dips, not just chasing highs. Going into Tuesday, $3.50 looks like an important support level, and if that base holds, it could act as a launchpad for further moves higher. On the upside, the stock will need to break through $3.95 and then $4 to signal a continuation of the rally. Now, while all that was happening in the tape, another important development unfolded in the media space. An interview between Eric Jackson and Anthony Pompliano hit X during the session, and it added fuel to the Opendoor narrative. Jackson reiterated his long-term goal of an $82 price target for Opendoor, but he was very clear that this is a multi-year journey. He emphasized patience and cautioned investors not to expect overnight fireworks. That's an important message because it helps frame the enthusiasm around the stock within a longer strategic vision. Jackson also laid out why he believes Opendoor has the potential to be more than just an iBuyer. He argued the company could evolve into a platform play for real estate, essentially the Airbnb of housing transactions. Instead of being weighed down with heavy inventory, the business could shift toward a lighter asset model, making it more scalable and potentially more profitable. That's a powerful idea because it reframes Opendoor from a niche disruptor into a potential category leader. Another interesting nugget from Jackson was his belief that Opendoor has surpassed Palantir as the most popular retail stock in the current environment. That's a big statement, and it shows just how much retail energy has rotated into Opendoor. He even hinted that the company should consider adding crypto to its balance sheet, a suggestion that wasn't the main focus of the discussion but certainly sparks curiosity among retail investors who love to see forward-looking innovation. Pompliano, for his part, praised the interim CEO for being hands-on and effective in tackling platform issues, highlighting his strong work ethic. That kind of endorsement matters because it gives investors confidence that the company isn't just drifting, it's actively addressing challenges and steering toward growth. So we have this alignment, a strong trading session, retail energy being stoked by influential voices, and a management team that's showing progress. All of that sets up Tuesday as another potentially pivotal day. But there's also a bigger backdrop we need to consider. One of the macro catalysts that investors have been watching is the Federal Reserve's path on interest rates. Housing is incredibly sensitive to rates, and Opendoor's fortunes are tied to real estate activity. The market has been pricing in the possibility of a rate cut later this year, maybe as early as September. Any shift in that outlook will directly impact Opendoor's growth story. If borrowing costs ease, it could unlock more housing demand and transaction volume, giving Opendoor a tailwind. And speaking of the macro backdrop, we had another important development on Monday that could influence global risk sentiment, the meeting between Donald Trump and Volodymyr Zelensky on the Ukraine conflict. While nothing is guaranteed and no final peace has been declared, reports suggest the meeting was constructive and showed progress toward a potential path to peace. That matters for markets because geopolitical stability lowers uncertainty. A peaceful outcome in Ukraine would ripple across energy markets, European equities, and even US sentiment. Risk assets like growth stocks, which include names like Opendoor, tend to benefit when the geopolitical environment looks less volatile. So while Opendoor is driven by company-specific catalysts, don't underestimate how broader events like this can help lift investor confidence. Another development worth noting is the cancellation of the reverse split vote. That overhang had been weighing on the stock, as reverse splits are often seen as desperation moves to maintain listing requirements. By taking it off the table, management signaled confidence and removed a near-term cloud of uncertainty. It's one more reason why retail investors are feeling emboldened. We should also talk about short interest. Opendoor remains heavily shorted, and that dynamic creates the potential for squeeze-like behavior. The rally we saw Monday may not have been a full-blown squeeze, but when you combine high short interest with retail enthusiasm, you have the ingredients for volatility. Traders will be watching closely to see if shorts start to cover further or if they dig in. Either way, it keeps the stock story compelling. So what should we watch for in Tuesday's pre-market and session? First, keep an eye on that 350 support zone. If the stock holds above it, that's a sign the base is intact. If it breaks below, the momentum could fizzle. On the upside, the big test will be breaking $4 and holding above it. That would confirm continuation and could invite more momentum buyers. Second, watch for any fresh commentary from management, Eric Jackson, or Anthony Pompliano. These voices are shaping retail sentiment, and another post or interview could spark activity. Already, Jackson made a subtle reference to GME and Roaring Kitty on X Monday night, which shows his leaning into the retail enthusiasm narrative without explicitly branding Opendoor as a meme stock. That balance is smart. It keeps the energy alive without undermining the serious strategic vision. Third, keep an eye on broader market cues. If the constructive Trump-Zelensky meeting boosts global optimism, we could see risk-on sentiment in U.S. markets. And if bond yields pull back on renewed rate cut expectations, that could be another lift for housing-linked stocks like Opendoor. To wrap this up, Monday was a statement day for Opendoor. The stock didn't just spike, it showed resilience by building support and finishing strong. The retail narrative is being shaped by high-profile voices, but there's also substance behind it, with management making moves and macro catalysts in play. As we head into Tuesday's pre-market, the story is about whether that momentum carries forward, whether retail conviction holds, and whether broader market optimism provides another push. Opendoor is at the center of retail attention right now, and with so many catalysts converging, Tuesday could be another day where all eyes are on this stock.